Hi everyone, welcome to this Bitcoin Treasury strategy session, challenges and opportunities for corporations and financial institutions. I'm Alexandre Lézé, Digital Assets Payments Lead at Accenture. I will be the moderator for today. I will say a quick few words about Paris Blockchain Society. Paris Blockchain Society is a non-profit organization bringing together young professionals and leaders of the blockchain ecosystem. Our objectives include the promotion of blockchain technology through conferences and training through mentoring programs. And we have more than 50 active members and are open to applications if you are interested. So today's discussion is about Bitcoin Treasury strategy, challenges and opportunities. The panel is composed of Dante Cook, head of Swan business at Swan Bitcoin, Noah Herman, chief revenue officer at Fortress, Graham Krizek, founder and CEO at Voltage, Esteban de la Peña, founding partner and head of OTC services at Ibex Mercado. And the goal for the event today, is to understand why Bitcoin could be part of a treasury strategy for financial institutions and corporations, discuss the challenges of how to implement such a strategy from a treasury operations and infrastructure standpoint, and what benefits a multinational organization could gain from adopting Bitcoin as part of its balance sheet or through payment applications. So the agenda for today is to give a few minutes to each member of the panel to introduce himself, and then go on the different details of why Bitcoin could be part of a treasury strategy, how to implement such a strategy from a treasury operations and infrastructure standpoint, and what benefits could a multinational organization gain from adopting Bitcoin or through payments applications. And then we'll have a Q&A with the audience, 15 minutes, and panel concluding thoughts and wrap up. So maybe to start with Dante, do you want to give a quick introduction on yourself and Swan? Dante? Can you hear me? Oh, we lost Dante. Okay. So Patrick, is it live? All right.
Yeah, we are live. I think he just have to he will come back, but let's just start with someone else. No problem.
Okay. So okay, let's start with Noah then, and we'll do Noah, Graham, and Esteban, and then Dante when he comes back.
Sounds good. Sounds good. So Noah Herman, Chief Revenue Officer for Fortress. I spent about 10 years in the traditional banking space. Worked with American Express. I worked with Merrill. I worked with Sumitomo, Mitsui, ABN AMRO. A few different roles, but always really cross-border payments centric. Trade finance as well, and realized in all of that there were some serious impediments to basically global business, financial flows, and eventually left, spent some time at a few startups, fintech startups, trying to solve some of those problems, and naturally ended up in the digital asset space, having spent 2 years at Circle leading the enterprise sales team there, and the past 2 years with Fortress. So excited to be here today, looking forward to it.
Awesome. Thank you, Noah. Graham, you want to?
Sure. Yeah. Hi, my name is Graham Krizek. I'm founder and CEO of Voltage. Previously, before Voltage, I have spent about 10 years working on Bitcoin, usually through the various like open source projects and being a part of the community, and then also worked in various cloud-focused software development roles. So worked from various small startups. Most recently was at Salesforce, working in their cloud department. And so I started Voltage in October of 2021 to really solve the issue of providing scalable, easy to use infrastructure for organizations as they look to adapt Bitcoin in the Lightning Network. So we have a full service platform that is made for using Bitcoin and Lightning much easier than doing it all yourself and building it all from scratch. So we work with a variety of different businesses to enable the Bitcoin and Lightning experience instead of whatever they're doing. And we've been really excited to see the growth of the network so far, and excited to have this conversation today.
Awesome. Thank you, Noah. Esteban?
So, bonsoir. My name is Esteban. I'm one of the founding members of IBIX. Basically, we started the business back in, Jose and Juan Pablo, the two brothers, they started the business in 2018 and I joined in 2019. We were a legacy OTC service and we have grown this to, being now a Lightning infrastructure company for institutions. And really the exciting part of it is that the Salvadorian Bitcoin law has put us on the map and has enabled us to scale this at a global with a global reach. And I'm excited to be here and share with you.
Awesome. Thank you, Esteban. And Dante?
All right. Sorry about the mishap earlier. My name is Dante Cook. I'm the head of our Swan business group. So I work with companies and corporations looking to add Bitcoin on their balance sheet and build a treasury strategy. Before Swan, I've done every role that you can in early stage venture-backed high growth startups. From sales to marketing to product to business development. And I really got into Bitcoin in 2017 and really haven't stopped kind of going down the rabbit hole since. And so excited to be here with you. I'm going to bring probably a bunch of bad athletic references. I'm a former Division I athlete. I'm actually calling from a college coach's office here, Division I basketball coach. So excited to share with you all today.
Awesome. Thank you, Dante. So maybe to start, and I will remind everyone, you can send any questions on the chat, and we'll try to answer that throughout the session. And then if we can't, at the end, we'll have 20 minutes to go through a Q&A. So maybe to start, Dante, with the first question. Why adding Bitcoin to a balance sheet of a financial institution or corporation?
Yeah, I think it's pretty self-explanatory when you take a data-driven approach. When you're looking purely just at the numbers, I and a number of colleagues have helped to develop an open source analytics and research search tool called the Nakamoto Portfolio. You can go to the nakamotoportfolio.com to kind of look at some of the different portfolio allocations and how does Bitcoin actually impact returns, the Sharpe ratio, the drawdown, the volatility of the different portfolios that you can have. And quite frankly, just from a literal sense, I've run thousands of portfolio simulations at this point using a variety of different research methods. And there is no portfolio that we have been able to find yet, whether it's cash, whether it's short duration bonds, long duration bonds, equities, whatever your mix of portfolio that you have, that Bitcoin does not increase the returns, reduce the risk and volatility, and improve the resilience, by the way, of these different portfolios. And so it's pretty incredible from just a data perspective. If you look at the numbers itself, and what strategy you have, whether it's a conservative strategy, whether you're mildly aggressive, or whether you're a young employee looking to save for their retirement, or a company that's looking for a 100-year strategy in terms of their treasury, it really makes sense to add a small piece of Bitcoin to your portfolio, because generally it zigs while the other assets zag. And what you want is that inverse correlation between Bitcoin and the rest of the market. One of the other interesting things that I would say is why it would be important to add Bitcoin to your strategy is really for resiliency. in light of the SVB banking collapse, you really saw companies struggle with liquidity. I mean, there were a couple hundred companies, even in our ecosystem, that were not going to be able to potentially make payroll if the Federal Reserve or the FDIC did not step in. And so from a pure liquidity standpoint, the role of insurance is to prevent you from going to absolute zero. And so the whole purpose of whether it's, Bitcoin is volatile of 10% within a given month, 90% of 2 months of payroll is better than 0% of 100% of your payroll. So improving resilience is the number one thing. And then lastly, from a public company or a large company perspective, there's a tried and true method for how all countries and all places own and depreciate assets on your balance sheet. So this would be property, this could be a machine, this could be equipment, this could be any sort of thing. Where you sort of get fuzzy with other, potential crypto projects is owning securities. That opens you up from a company to a lot of other regulation, a lot of other scrutiny, and then frankly, a lot of other rules as to whether you can even hold securities on a company balance sheet. And so Bitcoin being a commodity and property and digital asset, it's very straightforward in terms of how regulators look at how do we actually accrue and account for holding this asset on your balance sheet. So those would be three things that I would say first and foremost.
Awesome. Thank you, Dante. Noah, what do you think about that? And what are the key drivers of Bitcoin adoption on your side for your corporate and institutional clients?
Yeah, so it's always interesting. We as humans, as people, as professionals, we tend to observe the world from our sort of standpoint, right? And so even in just Dante's summary there, right, there are pieces there that I hadn't thought to add into corporate institutional reasons for adding Bitcoin balance sheet. They're not the ones we hear every day, but they are there and they're facts, right? They make sense. It's kind of the Treasury play. So without repeating those, I can think of a few more that we hear a lot. And by that, I mean Fortress and our teams. And I'll come at it, of course, from the perspective of the conversations we're having, right? Which are focused really on sort of two big categories, if you want to say it that way, and a few different levels in the institution. And that could mean like a multinational, a corporate, an enterprise, even a mid-sized business or a small business. It could also mean a financial institution. So the first one is one that is more sort of demand-led, and this is kind of your innovation side, right? You have, I think, in almost every corporate of a certain size, you have an innovation team, sometimes very substantially sized. In the digital asset space, that is true, right? Almost every major group now has some sort of digital asset innovation team or payments innovation team. So sometimes they're the ones leading the cause. And there are many things that they're working on, but one of them is always, how do we make our payments, our corporate treasury operations, right? How do we make those more efficient? How do we do them better? How do we do them for cheaper, faster, right? In a less operationally complex way? That's a big one. So we hear that a lot, and we think it's valid. And we've seen the ways that Bitcoin on balance sheet can help solve for that. Another one is just truly from the very straightforward, we're running a business and we want to do it better, right? And so there you have the CFO, you have the, maybe it's the head of FP&A, maybe it's the CAO, could be just the treasurer, any one of the treasurers who says, we are spending a lot of money, right? Just flat out on sending wires globally or ACH or whatever it might be. It's hard for us to move money around the world. We'd like to figure out how to do it for less. It's slow, right? It's hard for us as a multinational, which is constantly moving money around the world, to do that in a more speedy fashion. How can we do that, right? Very, very straightforward aim. And then you also have just purely and this is really highlighted in the financial institution space, you've got a lot of problems with reconciliation in the fiat world, right? That don't happen when you're running a Bitcoin on-chain transaction. They just almost evaporate. And we're talking about, tens, hundreds, thousands of staff in financial institutions who sit there just reconciling cross-border payments. That's a huge one as well. So all of those are, I would say, key drivers. What it is that we see today is driving the adoption. And then you know, you have a couple different ways. You have sort of the top down, right? I'm the CFO. This is what we're going to do next because we know it's the right thing. You also have the bottom up path as well, right? Which is where you have a set of customers that gains a critical mass and says, we're holding Bitcoin. And soon many customers will be holding Bitcoin, and we're going to pay you in Bitcoin. If we can't, we're going to pay somebody else, right? And so that's the other one that drives those. So lots more to talk about, but yeah, I'll pause there.
Thank you, Noah. Very interesting. Graham, maybe what are the key drivers you see on your side at Voltage, and what maybe are the key treasury risks and challenges to address and take into account?
Yeah, definitely. I mean, it's especially when you're thinking about, you know, treasury operations, you always need to evaluate the risk, right? Like that's something that, you know, everyone usually does as they're looking at, you know, new strategies or just, you know, the traditional strategies as well. But I think the one to highlight that's also pretty topical for, you know, the environment today is the counterparty risk associated with who are your relationships with as you look at treasury operations, you know, doing a lot of due diligence into, you know, those organizations and what they do. And it's also one of the really unique aspects of Bitcoin is the ability to hold your own keys and have complete ownership of the assets that you have inside of your treasury. And there's a lot of companies, organizations out there that really help facilitate that. So it's not there's I think some people get really maybe frightened in like, you know, this big responsibility of holding on to all of like the keys to your funds and all these things. But there's organizations that help in doing like multi-sig custody and really help in hand holding you every step of the way to make sure that you do have complete ownership of the funds, but you're not, you know, you don't have to learn all of the details all at once and really, you know, drink from the fire hose, so to speak. So I think when you evaluate working through a Bitcoin strategy, I think counterparty risk is the number one thing that you really need to think through and make sure that you have the operations in place to really facilitate the transaction as well. Just like Dante was saying, around, you know, with the Silicon Valley Bank collapse and things like that. You know, if you have Bitcoin inside of a third party custodial provider, you're still subject to those same things even inside of the Bitcoin you know, capacity. So if you have ownership of the funds, you can eliminate a lot of those things. So this treasury is fully in your control at all times, and you have the ability to be very flexible in the ways that you actually, you know, leverage the treasury or manage it. So there's a lot of unique aspects to Bitcoin that I think are very, very valuable. But when you're looking through, you know, the risks associated, I think that's the biggest one that I really see, and I like to call it, especially, you know, in the backdrop of Silicon Valley Bank, FTX, you know, most recently Prime Trust. Like there's a lot of organizations that have flaws, and you know, you want to reduce the amount of exposure you have to those kinds of organizations. And so, luckily with Bitcoin, you have that opportunity to limit your, you know, what exposure you have to those organizations. And then finally, I mean, I think when we look at you know, treasury strategies, I think, you know, to reiterate what Dante was saying, I mean, really, we have this saying in Bitcoin called like get off zero, which is meaning, you know, just have some sort of allocation. It doesn't have to be, you don't have to go 50%. You don't even have to go 5%. If you just have a small portion of it, I mean, it's just the typical diversification strategies around investments and, you know, having a stance in this new and emerging technology, and one that you have the ability of owning in a new way that just really hasn't been possible in the more of the traditional financial system. So I think ultimately those are the counterparty risks that I really like to call out. And, you know, there's a lot of providers like Voltage inside of our platform. We give full access to all, you know, keys and funds and backup files, all of the things that are necessary for you to have complete ownership of the funds at all times. And it's a unique opportunity for Bitcoin, and it's one that we really like to highlight as you're looking through, you know, what the risks are.
Awesome, thank you, Graham. I'd like to take a step back and maybe Esteban, how do you see institutions, corporations adopting Bitcoin right now in terms of treasury payments, and what do you see as most promising applications?
Yes, so a lot of topics were mentioned here, and I think, you know, to keep it simple, it's pretty much you have 21 million, never more, and then you're looking for where's the demand, right? The interesting thing here is we've seen adoption in different ways. One is top down, where they say, this makes sense to me and I want to hold it in my treasury. Other one is where this makes sense to me, but I still need to convince a lot of people. So they're looking for traditional vehicles coupled with an element of Bitcoin to it, that they can more easily explain it, and that it just really makes an easier click into all the different just challenges that a corporation faces, right? From regulatory to treasury to, as Graham mentioned, custody and all those issues. But from a Latin American perspective, we can see a very practical view to this. It's just been applied to payments and remittances specifically. And it's interesting because here you're seeing how the Lightning Network and Bitcoin sent through the Lightning Network is representing a payment railway by magnitudes of more efficiency than the current ones, right? So Latin America is pretty much an array of countries with siloed currencies, and each currency has its own challenges. And all Latin Americans want are dollars, right? And the easy thing that Bitcoin enables is access to dollars. And effectively, what we're seeing is corporations, institutions understanding that now they can put dollars into the hands of their users by sending Bitcoin through the Lightning Network and recreating this new fintech experience where they're talking, currency to currency. And then again, I go back to the 21 million and never more. So, you have two approaches. I think the biggest challenge in essence is for you to take that step and educate yourself and be able to explain it to others. Because it really is up to us to as a person, right, to understand it and make that step. Okay, this makes sense. I'm going to make the effort to learn how it applies to whatever I'm already doing and adding value to society, right?
Thank you, Esteban. And it's a question that's been asked in the comments, and thank you, Valentin, for this. One of the key concerns is obviously the regulation around the adoption of Bitcoin for corporate treasuries or financial institutions. Does anyone want to comment on this from a perspective of where you work with your clients? What are the key concerns they have, and how do you address these concerns? And maybe to piggyback on what Esteban just said, the key properties of Bitcoin and how this would impact the regulatory framework that's applicable.
Yeah, I'll comment on this. I think that there's a lot of different conversations that I think get commingled out there in terms of whether someone believes that the SEC should have as much regulatory power as it does. I believe is a very different conversation than have they been clear about how and who they're going to regulate. And I think over the past few decades, they've been very clear about what is an unregistered security, what is not an unregistered security, how do we define that through something like the Howey test, and those things in particular. And I think what you're seeing right now is an enforcement of some of the, I think, precedent that they've set out there, and then following up on what they said that they were actually going to do. So in terms of that, I would say, I would just fall within the lines of what's kind of precedent out there. And so the CFTC and the SEC have kind of determined that Bitcoin is a commodity in and of itself. And so if you look at it as an indefinite intangible asset, as I described as the IRS, I would just operate within that framework, and that you get all of the benefits of 24/7, 365 liquidity, of the access, of the privacy that Graham and Noah and Esteban have talked about, being able to own your own asset, being able to verify that asset, being able to transport that asset across borders when and where you need to. I think you get the best of both worlds, and that you get all of those properties of the ultimate digital asset with the security, protection, and framework that has been provided by the SEC, the CFTC. So I don't think it will decrease the adoption of Bitcoin or hinder its adoption there, because at the end of the day, Bitcoin is a protocol, or like Jack Mallers has been describing it lately, it's public infrastructure, and that it's accessible to everyone and owned by no one. And so I would just, there can be things that would slow it momentarily, but over the long course of what we're looking at, and as you're thinking about a treasury, we're not thinking in 3 months or 6 months. We're typically thinking in years and decades. And so I would just say maybe operate within the rules that they have. And over the long course of time, I don't see it really impacting adoption.
Thank you, Dante. But maybe Noah on the, and then Esteban is here. Maybe Noah on this, because the regulators have been pretty clear in the US about the commodity characterization of Bitcoin, but maybe more broadly in terms of regulations globally and compliance in terms of Bitcoin transactions for treasurers. How are your discussions with clients around this, and how do you see Bitcoin functioning in this context?
Yeah, absolutely. So I think Dante says it very well, right? Simplify the issues, look for the signal, not the noise, right? All these are valid. Not that we follow in the steps of large, let's call them legacy financial institutions, but if you look at it, a particular one right now, the timing's very interesting. That, you know, there's some clarity on the SEC from a BTC commodity standpoint. Everything else, don't know. And then days later, a large financial firm with the first letter B, last letter K, comes out and says, yes, we're going to actually file for an ETF, right? It's not, of course, you know, as Shakespeare said, one swallow does not a summer make, but it's a big swallow, right? So anyway, we all have to look at the signals, right? And that itself is a big signal. And if you look at even what's happened since then, you have at least 10 major financial institutions in every major geo around the world, which has done the same thing, which is very much the way this space operates. So there's that. To answer your question, Alexandre, I will look back to last fall when I addressed a cohort, which was about 20 of the 50 U.S. attorney generals at basically an off-site event in Barcelona alongside Chainalysis. And the question was, the federal government in the US, for all that it does well, is not, as we've hinted here, really doing that well with how you manage and how you make compliant, how you let institutions and corporates understand how to operate in a compliant way with Bitcoin. And so they were looking for a way to solve for that. And the simple answer was, well, as long as you can trace and track, control, and then be able to report on every single asset movement that a Bitcoin or a fraction of a Bitcoin incurs as it moves around the world, then you have truly an asset which is actually 1,000x more visible than a dollar, right? It's just very simple criminology and cryptography. So that was the answer to them, and that was what they were looking for. Was if the federal government's not going to regulate, we states are going to have to do it. How do we do it? And the answer was, as long as you have a group, right, and it could be any of the groups on the call here today, that can actually help to assist a corporation in figuring out exactly where these assets are as they travel through their corporate balance sheet, that is sufficient to be able to check all of your compliance, legal risk boxes. And that's the sentiment that we hear still today.
All right, thank you, Noah. Before we move on to the next section on how to actually use and leverage Bitcoin for treasury operations, Esteban or Graham, did you have a few comments before we move on?
Yeah, I really wanted to add a very specific comment, because in this argument, you know, semantics matter. And Bitcoin is not crypto, right? And the tendency that we have of using crypto as a term that, you know, just englobes everything is it's creating a challenge. And we can see in El Salvador, just as an example, you have a Bitcoin law and you have a digital assets law, right? And you have to keep it separated. And I think we're right now in the process of that education. At the end, as Noah mentioned, there are a lot of Bitcoiners talking to regulators, making that differentiation, because it really, you know, it sets a different, like, just set of rules of how you can approach, and then with ease, start being the innovator in whatever you're doing currently, right? And that is by focusing on Bitcoin and how to integrate Bitcoin as a payment rail or to your treasury into your company. And then after that, you can start discerning and have a better judgment on why Bitcoin is not crypto. And I don't want to be too off-cutting, but it's just how it is, right?
Interesting perspective, Esteban. Graham, any comments on this?
Yeah, I mean, I think most others have said a lot of what I was gonna say. So I'll just kind of reiterate I think some regulators have made the distinction between Bitcoin is treated differently or is being viewed differently than other crypto assets, and additionally, I mean, I think all of our organizations operate fairly heavily in the U.S., but the Europe and all these other places have kind of different laws, and that's a challenge to really navigate. Okay, where are you operating? What are your jurisdictions? What are those laws for them specifically? So I'd say that's a thing that everyone needs to really implore is what are the local rules and regulations for that. But I think broadly speaking, we see a lot of them taking on this approach of the distinction between Bitcoin and everything else. And I think that is an important one as you look for treasury operations, as we're talking about. I think there's having that clear distinction is very helpful when you're evaluating what do you add to your treasury.
All right, thank you, Abraham. So now let's move on the second part of this session on the how and how institutions, corporations can adopt and use, and which use case, and specifically because you are leaders in the space, how, and starting with Dante, maybe, how do you help at Swan corporate institutional clients adopt Bitcoin as part of their treasury strategy?
Yeah, I will. In general, Swan is a Bitcoin-only financial services company. We're a global company. We've got employees in 18 different countries. There are over 500 corporations. So these are operating companies with employees, vendors, balance sheets that own Bitcoin on their balance sheet through Swan. And so me and my team, our job is to really be self-service and support to help these people on that journey of adoption. And so like 75% of all Bitcoin purchased through our entity, our accounts and partners are automatically withdrawn to self-storage and self-custody. So what is that process? How do you begin to set up a multi-sig setup or a multi-sig wallet? How do you begin to, in very simple ways, like we actually take in 25 different currencies and we'll convert it to dollars to allow you to buy Bitcoin. We help you think about attracting and retaining employees through a Bitcoin benefit strategy. And so there's all of the things that we do as just an exchange where we help people convert fiat to Bitcoin in whatever form that comes in. But one of the main things that our team does that I think gets overlooked in any technological innovation, a lot of people overlook the distribution, the usage, and the adoption. And so I like to use this quote from John Wooden. He's a famous, one of the best coaches of all time in United States sports history. One of the things he used to do, he coached some of the best players of all time in basketball history, but he would make these guys every preseason learn how to put on their socks, because he said, it's the pebble in your shoe or the wrinkle in your socks that's going to beat us before the guy on the other team. And so the main thing that I really spend a lot of my time and focus on, I end up doing a lot of presentations to board meetings, to accounting partners with other teams, to executive leadership teams who are trying to understand what is Bitcoin and why is it important. Because it's often not the Bitcoin champion inside of the company that determines whether or not that a company adopts a Bitcoin strategy. It's typically their accounting partner who doesn't understand what an indefinite intangible asset is, who doesn't understand what a capital gain and a capital loss is, who doesn't understand why can't we mark up the value of Bitcoin if it goes up in value versus needing to take an impairment loss when it goes down. And so answering practical questions about Bitcoin from an executive leadership standpoint, I believe, is one of the number one hurdles to the adoption of Bitcoin. It's not a technological barrier that we have right now. It's an adoption, it's a knowledge, it's a distribution barrier that we have. And so helping to educate an executive team or an ownership team or a legal team on the merits of Bitcoin, on why it's a safe asset, on why it will help your company become more resilient, from a treasury strategy, walking through the numbers of, in an example, classic 60-40 portfolio, a 5% allocation of Bitcoin over the last 10 years would have increased returns by 100% and actually decreased your volatility by 12%, right? But everyone's been sold the 60-40 portfolio. But if you're not presented with data, how are you able to confidently make that decision? And so that's what our team really helps with on the front end. The Bitcoin stuff is not as complex as people make it on the back end. It's really getting Bitcoin incorporated into your strategy. That's really the hard piece. And so we take a lot of time and effort to help companies do that.
Thank you, Dante. And as you mentioned, there is lots of questions, concerns that different teams at corporate institutional clients have. And that's also what I wanted to ask you, Noah. It's what are the key constraints that you see at your clients in terms of the concrete adoption of and use of Bitcoin, and how does your technology solution solves these constraints?
Yeah, so there are, that term constraints, right? It can be defined in two different ways, right? You can have internal institutional constraints, and Dante, I think, speaks very well to that, right? We often are in first conversations with an innovation team or a payments team or an operations team or a treasurer who says, I already own Bitcoin, or I want to, and I want to run this action, this corporate action using it, but I have a whole legal team, a risk team, a compliance team, and a board I have to get this through, right? Which very much to Dante's point is who we then end up speaking with. So that's a constraint, but it's sort of just a general one. I won't refer to that in answering these. Instead, I'll talk about sort of the three ways that we hear in conversations every day that the multinationals and the financial institutions that are seeking to adopt or to build out their Bitcoin on balance sheet position, what they're trying to solve, right? And so in that sense, there are really just three. And some of these groups have just one specific thing, right? A lot of groups right now are saying, we're not ready yet to put a Bitcoin on balance sheet, right? We're just not there yet for whatever reason. But if you can solve this problem for us, then we absolutely will do it. An example of that, which is quite prevalent actually, is the trapped cash example, right? That's a very specific use case. And you do have groups that say, we are willing to test this technology to solve that problem, and we will do it, and then we'll further explore. Another example is just general, almost treasury, cash pooling is the term, right? There's a general treasury operation, which is a very specific use case. And somebody says, we're going to come in and we're going to test this out. You also have, I would call those sort of your specific use cases. Then you have the general constraints of, we're just trying to run a corporate balance sheet. Graham, I think earlier in the panel, was mentioning that settlement is a big thing, settlement risk and counterparty risk. There is a financial institution that we're working with that has specifically said, we are one of the largest in the region, right? It's an APAC financial institution. But when we send funds to another bank, it's 18 hours until we even know if those funds have arrived, right? And that's an 18-hour hole for $1 million, $10 million, $100 million payment on our balance sheet. That's a big problem. We understand on the theoretical basis that running Bitcoin on balance sheet can solve this, but we don't understand on a practical, how can we do it, right? So that is a good example of a corporate treasury action that happens every day, financial institution action that happens every day, and is kind of the general constraint, as I would call it. And then there's a third, which we talked about a little bit earlier in the panel, which is just very much the capacity to see into and to be able to track and trace and control the currency and the assets that are moving around your balance sheet, right? Which, for all of fiat's strengths, right? For all the strength of the US dollar, it's actually quite hard to trace, as we've said here many times. It's hard to figure out where those dollars have come from, where they're going, who's using them, who's used them in past. And that's a problem for institutions, especially large public or pre-public ones. So the third answer is, there are groups that have come to us and said, we are about to go public. or we are a private company that is over a certain amount of revenue, and therefore we need to be able to audit and account for and fall into the SOX or the Sarbanes-Oxley audit and control requirements. We can't do it right now. We don't know how to do it unless we do it manually, and that's a problem. That is one of the issues or the constraints, as you say, that running a treasury on chain using Bitcoin solves for almost immediately. So those are the three. And again, any combination of those three are reasons why institutions have come to us and said, how can we solve these?
Awesome. Thank you, Noah. And indeed, one of the key questions we get typically from clients is as well, is it hard, heavy in terms of infrastructure for this, in terms of the technicalities, and that's one of the questions I wanted to ask Graham. In terms of treasury adoption of Bitcoin and architecture setup, is it really difficult, and how does your company provide technical architecture brick for corporations, institutions willing to enter the space?
Yeah, definitely. It's not as hard as you think. I think that, again, like I kind of said earlier, I feel like there's this connotation around, using Bitcoin, leveraging it, that there's, you got to learn all of these big technical things, and it's a big hurdle to do it. But honestly, it's not as hard as you think, especially with all of the organizations on this panel today have, some form of help and understanding and onboarding and all of these different things. And so when you think about, the architecture from a treasury management standpoint, there's third party providers that can help you in actually in still maintaining the holding your keys, like I mentioned earlier, but also helping in facilitating the transactions and adding more or decreasing the value of your treasury and all of those different things. So there are providers that can help you in actually standing up whatever services are needed, doing that accounting, doing all of those things that are necessary for you to actually operate inside of it. And, for us as an organization, so we focus very heavily on the more of the transactional pieces of it. So we do a lot inside of like the Lightning Network, which is a layer 2 solution on top of Bitcoin to help facilitate payments, faster and cheaper. And by doing so, we set up infrastructure specifically for each company and help them in managing that infrastructure. We manage it for them, and then also give them, complete access to everything. So in terms of architecture, it depends on how you are using Bitcoin inside of your treasury. If it's strictly just something you plan on parking and holding there for an extended period, or if you plan to maybe use it more frequently for either payments or adding more or taking out. So there's a little bit of it depends on how you want to set it up, but ultimately there are organizations out there that help that we can certainly facilitate understanding all of these different organizations to help in that. But setting up the architecture is not challenging, especially if you're thinking from strictly holding onto the assets inside of a treasury and not doing much transactions. That's a very straightforward process. And again, companies can help onboard in that scenario. There's very little lift or requirements from your organization to implement that. A lot of the third parties help in that. And then additionally, if you look to do more transacting or actual use of the funds, then people like Voltage will help certainly in facilitating those, making sure that you have everything in place you need for both actually transacting, sending the literal transactions, as well as all of those things mentioned before on the accounting aspect, the tracing, all of those things, so exactly where your funds are going at all times, and all of your various departments inside of accounting and finance can feel good about it as well. So it sort of depends on the strategy in terms of how the architecture is set up and what you're trying to do. But ultimately, it's a pretty straightforward service. It's a pretty straightforward action to actually adding it into your whatever you're doing, whatever your operations are. And again, there's third parties that can really help facilitate all the things that are necessary. So I guess like the main point I want to hit home is the connotation that it's a big scary tactic to add Bitcoin to your balance sheet, and you have to know all of these specific details around the protocol and all these things is simply not true. And there's a lot of organizations out there that help you in making it. I mean, it can be as simple as signing up for Gmail or some of those services, and you can still have all of these amazing benefits that we've been talking about.
Thank you, Graham. Maybe Esteban, can you give a quick explanation of what is the Lightning Network for people that are not yet familiar with it? And tell us what are the most complex issue you see for now as a key hurdle for corporations and institutions to and that you address for your clients.
Sure. I'll keep it brief on the Lightning Network, and I'll just explain what it enables you without going into details, because then
Sure.
we can stay for days here. But basically, it just enables you to transfer Bitcoin at the speed of light. So what this allows you then to do is to transfer value immediately and have instant settlement. The interesting part here then is that you can use and adopt Bitcoin in different ways, as we've been talking before in your company. First and foremost, I think the biggest challenge the institutions are facing is that within all the different discussions around blockchain and crypto is usually you go in bigger corporations and it's, what's your blockchain strategy? And really, if you want to keep it simple, just keep it by what's your Bitcoin strategy. You can then discern, how you're going to go afterwards, if that is your choice, right? But effectively, on a Bitcoin strategy, you can easily adopt it for payments, as Graham mentioned. Just by signing up with an email. We have a POS right now that allows you to accept Bitcoin payments. It's across 27 jurisdictions with over 750 customers that we have. In El Salvador alone, it's over 650 active points that we have as well, with companies like Starbucks, Pizza Hut, whatever. So that's one option, and then you start seeing, okay, it's not as scary as I thought. Then you can go to any other segment in your company that really needs a more efficient settlement layer. Usually those are cross-border payments, so remittances would be the next one, and it's what we're seeing here in Latin America. And then finally, on the treasury part, it just requires a long-term view. And the challenge that we have as humans is that we're notoriously, we often overestimate what we can do in a year and totally underestimate what we can do in 10. So if you just hold, Bitcoin for 10 years, the story then and the decisions you'll be able to take then at that point in time will be very different to the ones that you are taking now. So that long-term view is going to help you, reduce the biggest challenge in perception, which is volatility, price volatility, right? Because effectively, price doesn't really matter. This is a very simple proposition, right? It's an open source settlement layer, as Dante mentioned, that Jack is presenting it as, and it's very true. And it's just 21 million of them. So that's it.
Awesome. Thank you, Esteban. Maybe Dante, Noah, any comments on what we've said before we move on to the different benefits and use case applications and predictions, forecasts for what could happen next before?
No, I'm good. I think they said it all.
I think Graham and Esteban said it very well.
Yeah, excellent. Well, thank you very much for this. Let's now move on to the part of a more future view and the benefits and unlocked use cases. So maybe Dante, what do you see as the most significant benefits a corporation, an institution could have as part of a Bitcoin strategy?
Yeah, I think in every market there's opportunity. In up markets and down markets, bull markets or bear markets. One of the unique opportunities that you have, specifically if you are a United States corporation or you have a United States dollar denominated based economy, maybe like in El Salvador or other places where you maybe have access to a market that is providing dividends, because right now, governments around the world, central banks around the world need liquidity. And so if you are a company or you are a corporate organization and you have additional cash, you can essentially purchase or fulfill that liquidity need that these central banks have in the form of treasuries or some other form of debt obligation that they may have, and receive 5, 6, 7% in terms of dividends. And so what you can do with the dividends that you receive from these bonds or these treasuries is that you can actually get off zero with a Bitcoin strategy for free. So an example might be you're buying short-term treasuries from the United States government at 5%, and you want to get a 1.5% position in Bitcoin. You can actually just use the 1.5% and just take the extra 3.5% in whatever currency that you have in the normal treasury, which, by the way, is more than you've been able to get over the last 15 years. And so it's an opportunity to diversify in a pretty risk-free way that allows companies to get off zero with Bitcoin without actually allocating operational cash. Now, one of the things that I would say also about Bitcoin is the most important thing when it comes to understanding returns of Bitcoin, like Esteban said, it's a pretty simple strategy. It's not rocket science. But one of the things that you should think about doing and considering as you're thinking about a strategy is if Bitcoin rises to or close to all-time highs, that's really not the time where you want to go in aggressively. Okay, when Bitcoin price is shooting up, you want to get frequent and you want to get small with your transactions. So think dollar cost averaging daily, right? The people that dollar cost average daily, even from the highs of 69,000, are up like 35% at this point if they just dollar cost average it into Bitcoin. And so one of the things that you can do right now is Bitcoin is near or around where all-time lows have been historically, is you can think about being fairly aggressive, because the time that you want to be in Bitcoin is before the run happens. If you were in Bitcoin or invested in Bitcoin on the 15 highest days of Bitcoin, you would again have earned over 100% return on your money in just the 15 highest performing days. And so the main thing about being in Bitcoin is just being in Bitcoin and not overthinking it, and not thinking about timing your strategy, but time in your strategy. And so there's some different things to do that. And I think you can actually benefit from a lot of these larger global macro players. Noah mentioned BlackRock earlier. Fidelity is also applying for a spot ETF. And so when you have trillions of dollars moving into an asset class, the opportunity for potential appreciation is very high. So I would consider those things as a company if you're thinking about getting into Bitcoin. And where the price is right now. And then also just for the long term, a risk-free way might be if you're buying bonds or treasuries, to use the dividend yield from the treasuries to start to build your Bitcoin balance risk-free.
Awesome. Thank you, Dante. Very interesting. Noah, maybe on the unlocked use cases that you see and that you work on with your clients, and can you provide maybe a view of what will be the next 3 to 5 years at Fortress and with your clients and with institutional corporate adoption?
Yep, absolutely. So we've talked a couple times on the panel so far about this notion that there is the Treasury play, the Treasury Bitcoin play, which in and of itself has many benefits for a corporate, for a financial institution. And some of those are proven out already, well proven. Some of them are to be proven. We also have the operational play, which is the one that is much more focused on payments, cross-border payments, intracompany transfers, right? Actually running a business in a global multinational way. And so my answer here will address both of those, right? I'm trying to encapsulate everything and sort of curate it for the audience. But my basic answer would be, and it is, I think, I can speak from Fortress's vantage point, but I think this answer is actually relevant for, of course, the groups on this call, but even the audience, right? I think this is respective to the major financial institutions around the world. I think it's responsible. I think it's with respect to the largest corporates and multinationals that are engaged in billions and trillions of dollars of financial financial transactions on a day-to-day basis. And it's the framework I would use, the traditional framework used if you look at a new technology is the so-called S-curve, and sort of how you at first have very, very early adopters who are willing to risk and who are very tech savvy. And that's like a 1 to 3 year curve. And then you've got the next set, which is I forget the names, but it's broadly similar to that, but I would call it just a stage 1 to 10, right? Like if we look at the world as, 5 years ago, right? When you thought about institutional corporate Bitcoin adoption, we were kind of at a stage 0, right? There really weren't many corporates and institutions and FIs that were doing this, at least at volume. In my opinion, at least, what we saw happen, a stage 1, if you will, was when MicroStrategy decided as a listed US corporate to invest its own treasury in Bitcoin, right? This was a major move for them, for it as a corporate, but also just for the space, for many, many reasons we can't get into, but a lot of them have to do with what Dante's talking about, which is that as a well-respected and co-founding and CEO member of MicroStrategy, Michael Saylor essentially said, I'm losing money and I have to return it to shareholders or shut the business down. And that's a US listed corporate right now. It's a different financial environment then, but all the rules still apply. To me, that was a stage 1. I believe that the stage 2 is what's just happened with BlackRock. Again, to Dante's point, with Fidelity, one of the major financial institutions around the world has put its cards on the table and said, we are making an informed, we can presume, bet on this path, on this pattern, right? We've made observations. We've seen what's happening in the space. We have hundreds of thousands of very smart employees who have all said this is the right move, and they've done that. To me, that's a stage 2. Now you have some momentum. I myself, even in the past month, I guess it is, month or 2 months now, I've spoken with at least 50 treasurers of again, Fortune 500 companies, and 5 or 6 of them have said to me the same phrase, which is, hey, Noah, I am not your leader in the space. I'm not Michael Saylor. I'm not going to go put our company's treasury into Bitcoin, nor am I going to run a cross-border financial transaction on it right now. But I will tell you that I'm a fast follower. I'm a fast follower. And as soon as I see one major group that looks just like us do it, you can bet you will be on the phone, right? And that's a very interesting to hear once. It's much more interesting when you hear it 5 times in effectively the same phrase. So to me, that's moving from stage 2 to sort of the next phase. Stage 3 to 5 to me is like, now we've got MicroStrategy and Block and Stripe, all the 500 groups that Dante just mentioned that Swan works with, right? All the groups that we work with already and that we are speaking with constantly now. And that is kind of the key. That's when you really start to gain momentum, is when you're in that stage 3 to 5 phase, because now it's either we've identified that Bitcoin is the path, digital assets are the path, on-chain transactions are the path. Bitcoin is the most trusted and elemental of all of them. And so that's what we'll use. And then you have the groups that are going to say, well, either we've got some FOMO going on, or again, we've hit critical mass, customers are demanding it. And so that's sort of your over the hump stage. And then it's just off to the races. So to me, that's the next basically 3 to 5 years, maybe 3 to 6 or 7 years. But we can already see such big, important movements happening around the world right now in stage 2 that I'm highly confident that that's what we're looking at. So.
Very clear. Thank you, Noah. And we've spoken a lot about the strategy for corporations, institutions related to Bitcoin, but I'm interested as well to know what is your company strategy, and maybe Graham. I'd be interested to know what's your company strategy and how do you plan for the future?
Yeah, definitely. I mean, so Voltage has been holding Bitcoin on its balance sheet since day one. I mean, given we're just a Bitcoin company, we believe in this wholeheartedly. So we've been holding it since day one, and we also use it in our products and services inside of like Lightning Network payment channels and things like that to help facilitate transactions. And so we hold it both as this store of value as well as a utility for our company to operate with. Maybe not every company out there needs it from the utility standpoint. But ultimately, we hold it, and it's over the last year. It's been honestly eye-opening to me. When we started holding it on our balance sheet, it was really just belief in the asset. We are participating in this economy. We want to be players in it. But then, as we've mentioned previously, with the collapse of FTX and then Silicon Valley Bank and all of these things, it's actually really shown as an operator of a business, as a founder of a company. And being unsure if you're going to be able to pay your employees on Monday is a very scary thing. It was very it was not an exercise that most people want to go through. But I had assurance knowing that we have Bitcoin on our balance sheet that we control entirely, and that if we needed to pay our employees via that, we have that opportunity. So our employees' families don't suffer from the happenings of things that we can't control. And then we still have kind of control over our own destiny in that regard. And so it was very eye-opening to us in terms of, we've held it for this belief and the asset. And then we never had to put it to use. We had the opportunity to put it to use if it was necessary. And that was a very interesting exercise to go through. So ultimately, we have been holding it, for a long period of time. And we are, our team is a very, we're all like Bitcoin, engineers. And so we have our own, custody systems and everything inside of our own organization. Not saying that's something that everyone, should do. Or I think most people should seek out those providers mentioned previously. But, we hold Bitcoin in our treasury, and we also do those things Dante mentioned around like dollar cost averaging, and actually, not just trying to go all in at once and buying just this big lump sum and, just trying to, do that and then sit on it, more averaging it out over time, increasing our allocation as we see fit and as it makes sense for the business. And so we not only holding it, but also having a strategy around how are you thinking about managing this over time of we've never decreased our allocation into Bitcoin. We've only increased over time. But thinking through what are your strategies around that and what are your plans for doing it. And it's one of the great things of removing the anxiety of price and fluctuation and when is a good time to buy, when is a good, all of these things. If you just have a system on periodically increasing your allocation over time, it proves to be successful, like Dante mentioned in some of his models that he's ran. And so we see a lot of success in organizations just doing this simple dollar cost averaging strategy into it. And I think that some of the ways of actually purchasing it with maybe returns from other aspects of your business makes a ton of sense. So really just looking at what is your strategy for going forward. But ultimately, it's something that us at Voltage, firmly believe in. We've been doing this for many years, and it's proven well, both from the standpoint of returns and having it sit on our balance sheet, as well as the opportunity to leverage those funds if we needed to, has proven to be incredibly valuable. And it's just something that when I started this business, I really didn't anticipate bank collapse and I need to figure out how am I going to do X, Y, and Z. And it's one of those things where no one really anticipates that for the most part. And it's one of those things where if that happens and you don't have an allocation into Bitcoin, it's kind of too late. Maybe it's challenging to acquire some amount at that point to go and pay your employees or whatever. So having a strategy for it earlier is obviously better. Both in terms of the return as well as the optionality to use it when is necessary. So overall, we've been doing it for a while, and we've been incredibly happy with the ways of doing it.
Very interesting. Thank you, Graham, for this very clear strategy, not only for clients but as well for your company. That's awesome. Esteban, at IBEX, what are your thoughts, strategy, Bitcoin strategy, and how's your company positioning itself for the future, for the next 5 to 10 years?
Yes, so I think it's pretty obvious that we like to put our Bitcoin to work as well, using it in the nodes without getting too technical. But it's pretty obvious that we hold Bitcoin because we see this industrial use case for it, right? It allows to recreate this new fintech experience, moving currency to currency with Bitcoin over the Lightning Network. And frankly, I always, when I speak with US-based or European-based friends and customers and family, is just they forget that there's more unbanked than banked people in the world. And the biggest challenge today is to move value in small volumes from A to B. And this is what this allows you. So it really creates an amazing opportunity right now where any company, literally any company, can now use Bitcoin in one way or the other and view it from either the perspective of a long-term hold for the treasury, or of a practical perspective that it reduces just the time to settle value between their counterparts. So then again, I know I sound repetitive, but I just think it's important to understand that there's only 21 and never more. So it's up to you to make that leap of I guess I wouldn't say faith, but just of pushing yourself to convincing yourself that you understand what is happening at this point in time. And at the end, as a society, we need to find a better way to interact with each other to better our state of general of the world in whatever perspective and whatever spectrum you might think you are. And with all this complexity of going that war and regulation and everything, it's we're all in the same boat, and we need to fix this boat somewhere or another. And by fixing the way that we communicate and transfer value to each other, that's really where we create a base that we can create a better society. And that's what makes me wake up in the morning and do what I'm doing, because as a recent father, I really think of that things. What am I going to leave my kids behind, and what tools will they have to solve the problems? And I just don't think that, as Christine Lagarde said, that global warming is affecting inflation. I just don't see where it matches, right? We're in a world where everybody's trying to blame somebody else, and it's really up to you as a person to take that step and do something better in your nearest vicinity. And understanding the fact that we need a better system to transfer value is, I think, one big step that you can do, and it's something that will set you up in a better position for the next 5 to 10 years.
Thank you, Esteban. Maybe Dante, you hadn't have the chance to give a comment on the what you see as a view of next 5 to 10 years of the Bitcoin ecosystem. What do you see as a future for the ecosystem?
Well, the future of the ecosystem, I would just say, there's all these terms that so many people have used in the Bitcoin ecosystem, and one is the gradually then suddenly. And that's the idea that, these complex adaptive systems like Bitcoin are adopted, at slower and slower paces. And then you just see this hockey stick adoption. And what I would say for all of the companies that are evaluating it, the iPhone came out in 2007. The first Tesla Roadster came out in 2009. The iPad came out in 2010. And so if you don't believe that this technology that has been operating for 99.9997% of the time since 2009, every 10 minutes, establishing a new record length, a new block, and more transactions with more usage, more volume, more adoption across the world is not going to be around, then I think you're just maybe not looking at all the other technological innovations that we've had so far as well. And so I think there's a tremendous opportunity right now, in that Bitcoin actually hasn't been adopted as quickly as some of these global viral networks such as Airbnb or Facebook or these things, which it actually preceded when it came out. And so it's going to be, I think, more jarring than people think when we go through this next halving. In particular, it's potentially self-fulfilling prophecy. It's maybe because of the economics of the miners needing to upgrade their infrastructure, and we get more and more decentralized, deflationary technological innovation every 4 years, that you actually get just better, performance, more compute power, more exahash coming into the network. There's all of these things that I think we have a year window coming up on this halving, a little less than a year window, where I think there's going to be a tremendous opportunity for people to get into Bitcoin. And we may have some volatility back down, but I think there's a tremendous floor right now before the new floor is set when you look at any pricing or any charts of how Bitcoin is typically performed, that you're going to be able to create a good cost basis for yourself as a corporation. I never share numbers because I can't predict the future, but I typically look at trends and how networks have grown and S-curves and those things in the past and try to extrapolate that forward.
Thank you, Dante. Well, thank you all for all of these responses that are all very interesting, and I've seen in the audience some comments. I suggest we start with the Q&A. I think we had the first question from the audience. Please feel free to add your questions in the comments. We will add them as they go. And I would like as well, before the end, we'll do 15 minutes of this Q&A and answers from the speakers. But I would like first to also thank Patrick Boufertig, President of Paris Blockchain Society, for being here and organizing all of it with the setup. That's really a great thing to have him with us today. And thank you, Patrick, for what you've done at the Paris Blockchain Society, and to give the chance to anyone to share their thoughts and get to know more about blockchain technology, and today about Bitcoin Treasury strategy. Do you want to say a few words before, Patrick, about the association?
Yeah, sure. Thanks a lot. I wasn't expecting to have such a highlight at the end of the panel. No, I would like to thank you. Really, it was a very insightful panel. I think we really delve into the details of all topics linked to a blockchain, Bitcoin adoption, and I think it was really insightful for all the viewers. So thanks a lot, and I'm looking forward to your last insights regarding the Q&A questions.
Awesome. Thank you, Patrick. So the first question from Rodolphe. Thank you very much, Rodolphe. And I see we have another one coming. Dear all, thanks for this very interesting meeting. What do you think about accepting BTC as a way of payment for blue chips companies with low transaction fees on the Lightning Network? So who would like to start with this first question?
I guess I'll jump in first. And sorry. Is that cool?
Yeah, go ahead.
Okay, awesome. Yeah, I mean, I think that it's a great question, and like we actually see that happening today already. So I think that there's a substantial amount of companies as a whole adopting Bitcoin as a form of payment, actually using it via the Lightning Network for low transaction fees. And so to touch on, some of it has already been said before, but the Lightning Network is a layer 2 solution on top of Bitcoin that enables instant settlement, near zero transaction fees, and also and it opens you up to a more global audience. And so when we see companies adopting Bitcoin via the Lightning Network as a form of payment today already, especially we see more blue chip type companies coming into that space even more so. I think with the recent things around like El Salvador adopting it as legal tender and all those things, which some other panelists can comment on, we see that coming into more mainstream as we go along, and we see. Us at Voltage, we've had an insane, I would say, amount of interest over the last 6 months or so, and people looking at how can we leverage this technology to facilitate payments. So when we look at a lot of people are interested in finding the benefits that I just mentioned. And there's a couple of different ways we see companies looking at that. Some of it is, maybe some traditional payment processors or folks that have banking relationships across the world want to use it for, internal settlement amongst their own parties, own people that have their relationships with, or maybe the end user is still transacting in fiat currency, but ultimately in the back end, they're using it for a settlement layer. And then additionally, we see companies exposing it to users, accepting Bitcoin as a form of payment, and really diving into the Lightning Network as a means of moving money. And so I think that there's some of the things that we talk about as far as corporate treasury around accounting and finance and these things apply to this as well. As you look at transacting inside of Bitcoin, a lot of these things still apply. And so there's tools like we have at Voltage, like IBEX has tools around helping you understand some of the complexities that exist, additional complexities that exist when you're dealing with Bitcoin. So ultimately, we see this happening today. It's definitely going to continue to happen. And we see a lot of tools and services being developed around this to help make this an even better, easier process over time.
Awesome. Thank you, Graham. Who wanted to jump on this?
I was going to say, Rodolphe, it's a great question. And yeah, Fortress is not a Lightning company per se, right? We actually work with Graham's company in order to facilitate on-chain and Lightning transactions. But I have a very specific answer to this question, which is that it's a brilliant idea. And it's one that I think we see as a next step for a lot of these Fortune 500s that we're speaking with. I can take the very specific example of manufacturing companies, of which we are in conversation with 5, and these are each over. They're all over $5 billion a year companies, right? Very large global operations, every continent, every country in the planet, basically, and they're not going to stop doing business just because they have problems getting capital out of certain countries, right? They just need to figure a way around it. So again, a very specific answer to this is, if you take a group that has a trapped cash problem because it's selling, air conditioners or cars in Africa somewhere, and it's in a currency controlled region and it can't get payment back to its headquarters, one of the ways that it can solve that in a point solution is it can just use a Bitcoin structured transaction series of wallets and pull cash out, right? But that's a one-time solution. These groups are not going to stop doing business globally. So how do you solve for that? And the answer is right here. You can actually use low transaction fee Lightning Network coupled with Bitcoin wallets to structure recurring transactions where now you have consumers on the ground who can pay for their air conditioner, pay for their car, pay for their whatever it is using Bitcoin. That solves that company's ongoing problem and becomes a structural component of their treasury, which is quite fascinating. So that'd be my answer.
Thank you, Noah. Esteban?
I would just like, to add this one thing, because semantics matter, and in the sense that accepting Bitcoin transactions doesn't mean that the person that is sending you that transaction holds Bitcoin or needs to, hold a balance on Bitcoin. You can really recreate this new fintech experience that we're talking about, where you have a stable balance, you have a stable dollar, stable euros, stable pesos, quetzales account, and you pay to that. And it's just, like a credit card. I mean, when you take your credit card traveling and, if you're French, you have euros and you come here to Guatemala and you pay with quetzales, doesn't mean that you hold quetzales in your bank account, right? You're just using it to transact. And that's the same thing that this enables. And I think it's super important to discern that, because that'll allow you, to understand that this is really just starting to grab track. And effectively, at the end, you can, as the company that is accepting Bitcoin payments, take a decision. Either I use it as a DCA strategy, or I go with a service provider that, puts dollars in my bank account, and it's, by the way, cheaper than the credit card processing fees. So it's a great point and a great question there, Rodolphe. And I really think you should consider and push yourself to answer that for yourself.
Thank you, Esteban. Maybe quickly, Dante, did you want to comment on this, or go to the next? Do you prefer to go to the next question?
No, these guys are the lightning and payment experts.
All right. So I saw we have a second question for the Q&A. Thank you, Valentin. So speaking about 3 to 5 years forecasts, do you also think Bitcoin lending could also be an increasing trend among corporates, whether it is using either Bitcoin Treasury that you accumulated to lend it to other actors with rather high APR, or accessing new financing sources through DeFi platforms? So any type of other use cases that we didn't touch on that any of you would like to comment on?
Yeah, this is a rabbit hole. We don't need to go like too deep into this because these structures can get really complex. But just for like clarification, the Bitcoin-backed lending business is very successful and very profitable. There are a couple major players that have been doing this for a while. Actually, Silvergate Bank, regardless of what people think, had a massive Bitcoin-backed lending business with 0 losses in it. So you've got companies like Unchained, you've got companies like Ledin. The reason why there will be Bitcoin-backed lending products versus other products, when you think about a mortgage-backed loan and you think about recuperating the value back from the lending product that you have to go evict somebody, you have to go get the title for this house, you have to go get that house back, and then you have to resell that house out on the market to another buyer, right? So the actual recuperation for that collateral is very difficult. With Bitcoin, it's very simple, right? We need to have an excess of reserves versus the liquidity lent out. And in the event that we have a default or we need to acquire that Bitcoin, the transfer and moving of that Bitcoin is much more simple than a car or physical collateral or other means of lending products out there. And so for that reason specifically, it's just a better product to lend against, and it's much more simpler to recoup and get the value back for that. And Bitcoin companies in general, people who are offering these products are really conservative. And so we're going to have an excess of reserves on that Bitcoin that we're lending dollars back to you on, so that you don't get margin called. We don't let you go above certain liquidity thresholds that other assets might. And so there will be a market for this. There's already a huge market for it. And I just see it continuing to increase because of the actual value of Bitcoin and the benefits it delivers versus traditional lending products and markets.
Thank you, Dante. Anyone wants to piggyback on this?
I would like to add something to that. And effectively, as Dante mentioned, Bitcoin is a super effective, efficient asset to lend against because it's liquid and it's easy to transfer. So we can argue right now that Bitcoin-backed lending in European, US markets and everything are more like a luxury. But here in Latin America, low fee, efficient lending is a necessity. And this is going to happen because it is just easier for me to give you Bitcoin and you give me something back. And Bitcoin in any way and form, it doesn't really mean it needs to be, the entire Bitcoin and have the volatility thing to this. Again, new fintech experience. But this is a necessity. We need to bring down credit allocation costs in Latin America and Asia for that matter. And again, there's more unbanked than banked people. So it's not a question if, and it's really not a question when, because it's already occurring. The question is how fast that will happen and that will be adopted.
Thank you, Stefan. I see we have 5 minutes left. Anyone wants to say a few words on this before we get to the closing thoughts? Nope. Then let's mix both. Well, thank you very much all for all your presentations. That was really enlightening. Thank you for that. So now closing thoughts. 5 minutes left. 1 minute each. Please give us a little concluding thoughts and where people can find you. Starting with Dante.
Yeah, thanks for having me today and for listening to all of the panelists here. Really enjoyed these guys, their companies. We actually work and collaborate together, all of us. So just really grateful to be here. The simple thing that I would say is please reach out like online to Us leaders in Bitcoin companies and Bitcoin spaces, like, we are all about adoption. We are your free Bitcoin marketing team. And so as you're looking for an advocate to help you create a presentation on the privacy of Bitcoin, the security of Bitcoin, the functionality of Bitcoin, whether that's a Lightning for a payments perspective, like, please reach out to us, because we have presentations and collateral to help you make that case. And so, before going off the deep end and looking at the technicality of Bitcoin, let's just work on a strategy for how we get your executive team bought in to have that conversation in the first place.
Awesome. Thank you. Noah?
Yeah, Dante says it well. We're a firm of about 120 Bitcoin engineers, really, if you look, under the hood. But what we are also is Dante used the term marketing team, which I think is a great one. We're basically like your consulting team, right? Same thing. But yes, we are in many cases, and with many financial institutions and corporates involved in what effectively amounts to a proof of concept, meaning that, as we talked about earlier in the call, there are often many people inside of the biggest corporations in the world that have an idea, are interested in, know a little bit about, are keen to figure out more about, or actually have seen a use case of bringing Bitcoin into the corporation on the balance sheet, but they have to pass through several layers of their institutions to do it. It's just a fact of life. You can look at the Fortress team, you can look at all of the teams here as the same. You can find us everywhere online, Telegram, etc. But think about us that way. If you have a question, if you think you have a use case, specific or general, we would love to talk it through with you, figure out what it is, how to solve it. We're all evangelists for the cause, so would look forward to that. And again, thanks to Patrick, Alexandre, and everyone else for being here.
Thank you, Noah. Graham?
Yeah, thanks for having me. Our company focuses very heavily on the Lightning Network. So if any people out there are interested in leveraging Lightning for any of their products and services, certainly reach out to us. And then additionally, like everyone else said, I mean, we're really all, I think that we all understand the landscape well enough that if come to any one of us, and we'll be able to, if we aren't the people to service what you need, we'll be able to point you to the right person to service exactly what your use case is. So don't be bashful. We definitely want to broaden the reach that Bitcoin has and be able to service more and more organizations. So us at Voltage, you can find us at voltage.cloud, and we're eager to help any way that we can as people look to onboard into Bitcoin and really figure out what their strategy is. I mean, that's one of the very, very exciting pieces of Bitcoin is there's so many opportunities to use the technology, both in forms of treasury, like we talked about, payments, like all these different things. And so the use cases are vast. And there's a lot of opportunity out there. So if you need help just kind of getting started, and that's kind of like Dante said, that if you don't need to go deep into the technicals right away. I think just understanding what this is and how it can apply to your business and what you're doing is really the step one here. And so feel free to reach out to any of us to really facilitate that kind of thinking and being able to figure out where to go from there.
Awesome. Thank you, Graham. Esteban?
Yeah, so first and foremost, Alexander, thank you for organizing this. Really, it's been a pleasure sharing with this amazing panel. And my shout out, to Patrick. I've been in your shoes. I've organized blockchain weeks and hackathons and everything. And with time, I really noticed, there's a difference. And the only thing I would like to urge you to is to understand for yourself that difference, because that will help you discern and just speak more freely about it without, just bashing. There's a lot of value in a lot of things everywhere. And most importantly, at the end of the day, this Bitcoin is really, and for Europe and the Europeans listening to us, I know it's kind of difficult to understand. I don't look German, but I'm actually German. And when you step out and you see the needs that we have today as a society, we have a problem that we need to address and solve, and we're solving right now. And all these companies are doing a big thing to solve this. And this problem is just going to get bigger tomorrow and the days that are coming. So if we don't start doing something to it and just speaking out, so that's why I really thank you, Patrick, for this platform, then we're just gonna sit back and then we're gonna see, okay, what happened here? It's just like right now, everybody that's listening here has the opportunity to jump into the Internet of Value, into the TCP IP of moving money, and you can actually own a part of it. And from that aspect, and not hyping the 21 million and never more, then to that is just take that step, educate yourself, and understand what you can do to add value and how you can integrate this into a company. Because from a Latin American perspective, we have big conglomerates that are adopting this because it brings big value. I mean, we just announced in Miami, where I met Alexander, the partnership with Grupo Salinas. This group has a bank, has sports teams, has a TV station, has internet, has retail, has so many things that are coming to this, and they're not stopping. Because you reduce the cost of a remittance from 13-12% to 3.5%. It is amazing. 10%, you're reducing 10% of a cost of something that literally supports over 20 and 30% of the GDP of many Latin American and Asian countries and African countries. So this is not stopping. It's up to you to understand in which side of history you'll be.
What a way of concluding this panel. Thank you so much, Esteban. Before we end this session, Patrick, do you want to say a few words on where and why people could find you?
Yeah, sure. So if we organize regular panel on various topics regarding blockchain, crypto, we are on LinkedIn and Twitter. On our LinkedIn page, you can find the link to our newsletter to receive directly our next event in your inbox. And yeah, again, thanks a lot for all your insights. I think it's very exciting for the future of Bitcoin and all the implications it can have on companies and the economy in general. So thank you for your detailed discussion and inputs on this topic. Thanks a lot, and thanks, Alexandre, for your brilliant moderation.
Well, thank you very much, Patrick. As mentioned at the beginning, you can also find me on LinkedIn, Twitter, and Noster, the freedom application for social media. And I'm part of Accenture, leading the digital assets payments team for France and Benelux, and offering lead for Web3 banking and payments in the global team. So feel free to reach out. I'll be happy to talk Bitcoin treasury strategy and to connect with the different panelists and brilliant panelists of today with their excellent solutions and leading companies. So thank you all very much for being here today, and let's see each other next time on another Bitcoin session. Thank you very much.